Communication of corrective measures to the responsible for the government. Chartered accountants are ensure the contravention of NDA 16 and AS 37 in address and rectification. However, if does not communicate the corrective measures of the directors, the fundamental principles of professional behavior will be breached. Members should comply with the relevant laws and regulation, avoid any actions to discredit the profession. By knowing, allowing the directors not only to apply the requirement of NDA, chartered accountants would not be acting diligently in accordance with applying guidance and would not be demonstrate the professional competence in due care. In such situation, he will be subject to professional misconduct under clause 5, 6, subject part 1 of second schedule on chartered accountants as 1949. Clause 5 states a chartered accountant is guilty of professional misconduct then he fails to disclose the material fact known to him which is not disclosed in the financial statement but disclose of which necessary to make such financial statement where the concern with financial statement is a professional capacity. Clause 6 states that CA is guilty of professional misconduct when he fails to report a material misstatement known to him to appear in the financial statement with which he is concerned to be professional capacity. Clause 7 states that a chartered accountant is guilty of professional misconduct when he does not exercise due diligence and gross negligence in the conduct of professional duties. Confidentiality. Chartered accountant shall comply with the principle of confidentiality which requires an accountant to respect of confidentiality in information acquired as a result of professional employment relationship. An accountant shall be allowed to the possibility of inadvertent disclosure including social environment and particular to the close business associates or immediate closely family members. Maintain confidentiality of information within the firms and employing organization. Maintain confidentiality of information disclosed by a prospective client or employee organization. Not to disclose confidential information acquired as a result of professional employment relationship outside the firm or employing organization without proper specific authority unless there is a legal professional duty to write disclose. Not use confidential information acquired as a result of professional employment relationship for a professional advantages of the accountant or the advantage of the third party. Not to use not to use or disclose any confidential information either acquired or received as a result of professional or employment relationship after that relationship has ended. Take reasonable steps to ensure that personnel under the accountant control and individual that would advise assistant for obtaining respect of accountant body and confidentiality. For instance, confidentiality is a paramount ethical principle that should not be breached when providing payroll services to clients, unless required by law and authorized by the client. Chartered accountants made a duty to uphold the confidentiality of payroll-related information and ensure the security and protection of sensitive data of the organization. Confidentiality serves a public interest because it facilitates free flow of information from a chartered accountant, clients, or employee organization to the accountant and the knowledge that this information is not to be disclosed to third party. Nevertheless, the following circumstances when chartered accountants are to or might be required to disclose confidential information when such disclosure might be appropriate. Disclosure is required by law. For example, the production of documents or another provision of evidence of the course of legal proceeding. Disclose to the appropriate public authorities of infringement of laws that comes to light. Disclose in permitted by laws and authorized by clients or by employee organization. There is a professional duty or right to disclose when not prohibited by law to comply with the requirement of peer review or quality review of institution. This respond to an inquiry of investigation of a professional or a regulatory body to protect the professional interests of chartered accountant legal proceeding or to comply with the technical and professional standards including audit ethics requirement. Branch breaches of confidential may cause a scenario like insider trading where chartered accountant must avoid using or sharing the material information of the entities for personal gains. Similarly, hiding material facts which require disclosure like reporting fraud, illegal activities, or non-compliance with the laws and regulation does not constitute confidentiality. Chartered accountants have ethical duty to report fraudulent manipulative activities that could impact the end user. But nevertheless, confidential will be applied custodially with justification, legal and ethical ground, and the professional judgment, and after due diligence whether necessary. Chartered account shall continue to comply with the principle of confidentiality even after the end of relationship between the accountant and the client or an employee organization. When changing employment or acquire of a new client, the accountant is entitled to use prior experience but shall not use and disclose any unconfidential information acquired or received as a result of professional or employment relationship. Professional behavior when promoting themselves and his work, chartered accountant shall not bring profession into disrepute. Chartered accountant is required to conduct its affair in a manner that he remains outside the boundaries of professional and other misconduct. Chartered accountant shall be honest and truthful and shall not make exaggerate claims of services offered by or a qualification or service of the accountant. Disparaging references unsubstantial comparison of work of others. any direct or indirect measures to advertisement of professional other fact which is violation of advertisement guidance issued by the council or the institution for time being. Conceptual framework. The chartered accountant shall apply the conceptual frameworks to identify, evaluate, address threats to compliance with the fundamental principle. Identify a threat to compliance with the fundamental principle. Evaluate the threats identified. Address the threat for eliminating or reducing them to acceptable level. When applying conceptual framework, chartered accountant shall exercise professional judgment, remain alert for new information and to change its facts and circumstances. Use a reasonable information informed third party test. Exercise professional judgment. Professional judgment involves application of relevant training, professional knowledge, skill and experience commensurate with the facts of circumstances, including nature and scope of a particular professional activities and the interest of relationship involved. These are related to the undertaking of professional service activities and exercise of professional when the chartered accountant applies a conceptual framework in order to make informed decisions about the courses of actions available and determine whether the decisions are appropriate in circumstances. The understanding and known fact of circumstances is a prerequisite to the proper application of conceptual framework. The delegate action necessary to obtain the understanding and coming to commensurate when there is a fundamental principle has been complied with a required exercise of professional judgment. In exercising the professional judgment, obtain understanding, chartered accountants consider among the matter whether it is a reason that potential relevant information might be missing and the fact and circumstances known to the accountant. There is an inconsistency between known facts and circumstances and the accountant expectations. The auditor's expertise and experience are sufficient to reach conclusion. There is a need to consult with each other with relevant expertise and experience. Information provided is a reasonable basis on which reach a conclusion. Accountant's own preconditions or the biases right to affect the accountant's exercise professional judgment. There might be other reasonable conclusion that would be reached after the available information. Reasonable informed third party. The reasonably informed third party test is a consider of chartered accountant whether the same conclusion would like to reach by other parties. Such consideration is made from the perspective of a reasonably informed third party. So whether all the relevant facts and circumstances that the accountant knows and could reasonable to expect it to know at the time of conclusion was made. The reasonable and informed third party does not need to be the accountant but would possess the relevant knowledge and expertise to understand and evaluate the appropriate of the accountant's conclusion in an impartial manner. Part 2 Chartered Accountant Service. Conflict in interest. Chartered accountant shall not allow the conflict of interest to compromise professional and business judgment. Example: the circumstances might create a conflict of interest include serving in a management or governance position for two employing organization, acquiring confidential information from one organization that might be used by a chartered accountant to the advantage or disadvantages of the other organization. Undertaking professional activities for each of two parties in a partnership, where two parties are employing the accountant to assist them to dissolve their partnership. Preparing financial information to certain members of management of the accountant employing organization who is seeking to undertake the management of buyout. Being responsible for selecting vendor for the employee's organization when an immediate family member of the accountant shall benefit financially from this transaction. Serving governance capacity in employing organization, that is approving certain investment of the company where one of these investment will increase the value of investment portfolio of the accountant or immediate family member. Conflict identification. Chartered accountant to take a reasonable step to identify the circumstances that may create conflict of interest, thereby threat of compliance with one or more of the fundamental principles. Such steps shall include identifying nature of the relevant interest and business between the parties involved, and activities and the implementation of relevant parties. Threat created by conflict of interest. In general, more direct connection between professional activity and the matter on which parties interest conflict, the more likely the level is a threat is not acceptable level. For example, of an option or action that might eliminate the threat created by conflicts of interest is withdrawn from the decision-making process related to the matter, giving rise to a conflict of interest. Example: action that might be safeguard to address threat created by conflict of interest include restructuring or segregating certain responsibilities and duties, obtaining appropriate oversight, for example, acting on supervision of the execution and executing act. Disclosed content. It is generally necessary to disclose a few nature of the conflict of interest and how many threats created were addressed to relevant parties, including the appropriate levels with an employing organization affect the conflict. Obtain consent from the relevant party chartered accountant to undertake professional activity and safeguards are applied to address the threat. When addressing the conflict of interest, chartered accountants are encouraged to seek guidance from within the employing organization or from an institution, legal counsel, and another accountant when making such disclosure, sharing information with the employee organization, and seeking guidance from third party. Principal and confidential applies. Registration Alab Limited directors feels or company needs a significant injection of capital in order to modernize plant and equipment as the company has been promised firm order if it may produce the goods of international standards. The current lending policies of the bank require prospective borrowers to demonstrate strong projected cash flow, coupled with the debt service coverage ratio exceed 10%. However, the current project statement cash flow does not satisfy the bank criteria of lending. The data have told the bank that company is in excellent financial position. The financial result and cash flow projection will need criteria, and chartered accountant will submit the report to the effect shortly. Chartered has recently joined Alab Limited as openly stated that he cannot afford to lose a job because of the financial commitment. They can discuss a potential ethical conflict that may arise in the above scenario and ethical principle which would grow guide how the chartered accountant would respond to deviation. The given scenario presents the two forms of conflict of interest. Pressure to obtain finance and chartered account persons circumstances. Chartered accountants is under the pressure to provide the bank with a projected cash flow statement that will meet the bank's criteria when the fact of actual projection does not meet the criteria. Chartered accountant financial consequences meet that he cannot lose a job. Thus, the ethical and professional standards required of the accountants are not with the pressure of his personal circumstances. Duty of shareholder, employees, and young. Data has a duty to act in the best interest of the company, shareholder, and employees, and duty to present fairly and any information the bank may rely on. Injection of capital to modernize the plant and equipment appears to be the capacity expansion, which will lead to great profit. This being in interest of shareholder and employees. However, if such a finance is obtained based on the misleading information, it would actually be detrimental for going concern case of company. This would be argued that as a conflict between short-term and medium interest of the company, the means of moderation of company as a long-term interest and detriment to the company's reputation of the directors do not conform the ethics. Ethic principle guiding chartered accountants. Chartered account financial circumstances compelled to the pressure of their directors are end up with knowing, disclosing incorrect information to the bank, thereby compromising the fundamental principle objectivity, integrity, and professional competence. By exhibiting bias due to the risk of losing job through the reporting favorable cash flow to the bank, the objective is compromised. But the integrity also compromised by way of not acting straightforward and honest manner. Incorrect information is only disclosed forecast, unlike financial statement, do not specify that they have been prepared in accordance with NDAs. However, the principle of professional competence requires the accountant to prepare the cash flow projected to the best of the professional judgment, which would not be the case if the projector shows a more positive position that would actually anticipated. Appropriate action. Chartered accountant faces immediate ethical dilemma. The must apply the moral and ethical judgment. As a professional, he is responsible for presenting the truth, not intuitive, creative accounting or interpretation. The chartered accountant would pose the interest of the company and professional ethic first, and instead of the reporting of the bank to the honest reflect of company's current financial position. Being an investor in the director, he must prevent deliberate misrepresentation to the bank, and no matter of the consequences of him personal. The accountant should not allow the undue elevation of the directors to override the professional judgment and direct. This is a long-term invest interest or comply with the surveillance. It suggests that the chartered accountant would communicate to the director, submit the projected statement of cash flow to the bank, which reflect the current position of the company. Knowing the provided incorrect information is considered as professional misconduct. To prevent this misconduct, the chartered accountant should not provide incorrect projected cash flow to the bank, color of the financial position to the entity. By adhering to the ethical principle, the chartered accountant will maintain professional integrity, continue to trust and reliable place of work expected from him. However, if he submits incorrect projected cash flow, he would be subject to professional misconduct under the Class 1 and Part 2 of Schedule Institute of Chartered Accountant 1949. The Class 1 mistakes and members of the institute, whether the practice or not, shall be deemed to be guilty of professional misconduct. It is and contravenes any of the provision of the Act or the regulations may be determine the guidance issued by the council as per the guidance issued by the council. Member of institution who is employing excuse due diligence shall not be gross negligent in the conduct of duties. Preparation, presentation of information. When presentation and preparation of information, chartered accountant shall prepare and present information in accordance with the relevant reporting framework where applicable. Prepare and present information in a manner that is intended either to mislead nor to influence contractual regulation outcome improperly. Exercise professional judgment to present the fact accurately and comply with all the material aspects. Describe clearly the true nature of business transaction activity and classify the records, information, and timely in a proper manner. Not omit anything that is intention for a content of information misleading influence contractual or regulated outcomes appropriately. For example, influencing the contractual or regulated outcomes inappropriately using an unrealistic estimate the intent and avoiding violation of the contractual requirements such be debt covenant or regulatory requirements such as capital requirement of financial institution. Using a description of preparation presentation information. The preparation presentation information might require assessing the discretion of making professional judgment. For a chartered accountant shall not exercise a discretion of the intention of misleading other to influence contractual regulation outcome inappropriately. The examples in way of discretion might be misused to achieve the inappropriate outcomes. Determines estimate. For example, determining the fair value estimate in order to misrepresent profit and loss. Selecting or changing the accounting policy method more among two or more alternative permitted under the applicable financial reporting framework. For example, selecting policy of accounting of long-term contracts in order to misrepresent loss and profit and loss. Determine timely transaction. For example, time of sale of the assets near to the end of the fiscal year in order to mislead. Determine the structures of a transaction. For example, structuring financial transaction in order to misrepresent assets and liability and classifying cash flow. Selecting disclosure. For example, omitting and obscuring information relating to financing and operation risk in order to mislead. When performing professional activities, chartered accountant shall exercise professional judgment in identifying the considered purpose of which is information to be used, context within which information is used, and audience which is order or whom to be addressed. For example, when preparing and presenting a pro forma reports, budgets, and forecasts, and issuing relevant information, approximate an assumption where appropriate would enable those who might rely on this information to form their own judgment. Relying of work on others. Chartered accountant who intend to rely on the work of others, either internally or externally in the employee organization. They shall exercise professional judgment and determine the steps to take in any order full of responsibility. Factor consider determining whether the reliance is order of reasonable include reputation or expertise or resources available to other individual organization. Where the other individual subject to application of professional and ethical requirement. Such information might be gained from the prior associate or with or whom consulting others in the other individual organization. Addressing information that is might be misleading. A chartered accountant or a reason be believe that information which is being a chartered accountant as associate is misleading. Accountant should take appropriate action to seek and resolve the matter. Action that might be appropriate include discussing concepts that information is misleading the chartered accountant superior or the appropriate level of management within the accounting employee organization of those charged with governance and the request of the individual to take appropriate action to resolve the matter. Such action might include having information corrected if the information has already been disclosed in the intended user, forming them to the correct information, consulting the policies and procedure of the employing matter. For example, ethics, whistleblowing policy, and ranging how to address such matter internally. Chartered accountant might determine the employee organization has not taken appropriate action. If an accountant continues to have reason to believe the information is misleading, following further action might be appropriate to provide the accountant remains alert to the principal confidentiality. Consulting with the institution, internal external auditor for employee organization, and legal counsel, determine whether any requirement exists to communicate them. Third parties, including the seducers of the information, regularity and oversight authorities. If other exhausts are feasible options, chartered accountant determines appropriate action has not taken and this reason to believe the information is still misleading, the accountant shall refuse to be and remain associated with information. In such a circumstance, it may be appropriate for chartered accountant to resign from the employee organization. Sunshine is a lesson company in the cosmetic industry has a debt convertents attach some of this borrowing which is including financial liability in balance sheet. These convertents mandate the company to repay the debts in full and Sunshine Limited failed to maintain liquidity ratio and operating margin above specific limit. Director along with CFO of the company who is a chartered accountant are considered entering into the fresh 5-year lease agreement but concerned about the negative impact of potential lease obligation may have the above mentioned convenience. And according to the director of CFO proposed that the lease agreement is drafted in such a way that it is a series of 10-month leases rather than a single 5-year lease. In order to utilize the short-term leases exemption available in Section 116 leases, this would be enable the accounting of leases in the legal form. The director believed that the treatment will meet the requirement of the debt convention. Such a treatment may contravene with the accounting statement. Discuss the ethical and accounting impact of the issue of a CFO. Lease agreement substance presented. Stakeholder must inform accurate disclosure and valuation based on the information presented in the financial statement. As such, ensuring financial statement to reliable and utmost important. The Director of Sunshine Limited ethical responsible for producing financial statement and comply with the NDAs and transport are free from labor error. Lender often attach convenience in the convenience to the terms of the agreement in order to protect the interest of the entity. They would also be crucially important to potential debt and equity investor when assessing the risk and return from any future investment of equity. Proposed action of Sunshine appears to be deliberate attempt to circumvent the terms of the convention. The legal firm would require an end to a series of short-term leases which would record in the profit and loss without any right to use asset and lease liability being recognized under Section 116 lease. This would be a form of balance sheet finance and would not report the true asset and obligation of Sunshine. As a result of this proposed action, the liquidity ratio would be adversely misrepresented. Further, the operation profit margin would be adversely affected as the expense associated with the lease is likely to be higher than the depreciation charged if the leased assets is recognized. Hence, the proposed may actually be detrimental to the operation profit convention. Sunshine Limited is aware of the proposed treatment may be contrary with the NDAs. Such a manipulation would be a clear breach of fundamental principle of objectivity and integrity in outlining the code of ethics. It is important to chartered accountant to exercise professional behavior and due care of all time. The proposal of Sunshine Limited is likely to mislead the stakeholders in the entities. This would discourage the profession by creating lack of confidence within the profession. That the director of Sunshine must be remain the ethical responsibility and pursuant to the accounting treatment must fully comply with the NDAs and principle outlined with the framework and should be processed with the financing agreement. However, if a CEO fails to comply with the profession duty, he should be subject to professional misconduct as the Clause 1 and Part P of the second schedule of Chartered Accountant 1940. The Clause 1 states that member of the institute, whether a practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provision of the Act or regulation made thereunder or any guidance issued by the Council. As per the guidance issued by the Council, member of institute who is employee shall exercise the due diligence and shall not be gross negligent to the conduct of the duty. Acting with sufficient expertise. Chartered accountant shall not intentionally mislead an employee or organization as to level of expertise or experience possessed. The self-interest to compromise the principle of professional competence and due care might be created by chartered accountant has insufficient time to perform completion of relevant rules, incomplete restriction, otherwise inadequate information for performing the duty, insufficient experience, training, or other education, inadequate resources for the performance of duty. Example action that might be safeguard to address such self-interest threat include obtaining assistance or training from someone with the necessary expertise, ensuring that there is adequate time available for performing relevant duties. If a threat is compliance with the principle of professional competence and due care cannot be assessed, chartered accountant will determine whether the decline of perform the duty is questioned. If the chartered accountant determines the declining is appropriate, the chartered accountant and the accountant shall communicate the reason. Castilla Limited, a listed company engaged in the issue of automobile spare parts. The company's property financial statement for the financial year. The financial director or director of Acacia is entitled to an incentive based on the operating profit margin of the company. You have been appointed as a consultant to advise the preparation of financial statement. You are noticed the following issues. On 1st April, Agastya benefit person scheme amended to increase the pension entitlement 12% and final salary to 18.5% final salary. Amendment was made due to salary cuts made in accounts of pandemic. Chartered accountants has shown that increase in pension entitlement 85 crores under the employee benefit form part of operating profit. The directors are unhappy with the pension. They believe that the pension scheme is not integral to the operation of the company since it is a post-paid retirement of the employees. Thus, insisting on a presenting would be misleading the computation of operating profit and loss. According to the director, proposed to change the accounting policy so that they can have the gain or losses on pension scheme would be recognized under the other comprehensive income. Director believe that the policy choice will make the financial statement more inconsistent and understandable, thereby justify the same on the ground on the fair presentation, including define the framework pension scheme of SCA currently in deficit and require the discuss the ethical and accounting implication on the given issue, refer the relevant NDAs whether appropriate for the presentation consultation. Ethical implementation of the accounting policy as per NDA's aid accounting policy change in the accounting estimate. Error only permits the change of accounting policy changes required by the NDAs and resulting of financial statement providing reliable, more relevant information from the effect of transaction, other types of condition as the entity's financial position. The financial performance of cash flow retrospective adjustment is required unless the change arising on the new accounting policy with transaction arrangement in order to change. It is permissible to depart from the requirement in DAs, but only in extreme rare circumstances when the compliance would be misleading that would conflict the overall objective of a financial statement. Practically, the override the rare it ever invoked. Section NDS 19 employee benefit requires all gains and losses on defined benefit pension scheme is recognize profit and loss except the remeasurement component relating to plan assets and redefined benefit obligation, which may be recognized in other comprehensive income. According to the certain service cost, past service cost, and net interest cost on the net defined benefit obligation must be recognized in profit and loss. NDS 19 does not offer any alternative treatment of accounting policies choice in terms of NDS 18. Therefore, the director proposed cannot be justify the ground of fair presentation. The directors are ethically bound to prepare financial statement which reflect a true and fair view of entity's performance and financial position to comply with the NDAs. It is the self-interest of the pension scheme that is making the directors consider change in accounting policy in order to maximize profit for maximizing the bonus potential. The amendment of the pension scheme is a past service cost in the term of NDAs 19 would be expensed to profit and loss account during the period such a plan amendment has occurred at us immediately. This would impact the operation profit of Agastya Limited, therefore reducing the potential bonus. Additionally, it appears the director wishes to manipulate the aspect of pension scheme such as current service cost, and since the pension scheme is given to be deficit net finance cost, the directors are purposely manipulating the presentation of these items or recording them in equity instead of profit and loss account. The financial statement would not be compliant with the NDAs and would not give a reliable picture of the true cost of the company and operation of pension scheme. The treatment would be having a financial statement less compared with the entities currently applying Section NDAs 19. Therefore, the exploiting statement gives a financial statement to make in the event of above non-compliance. Further, the treatment would be against the fundamental principle objective, integrity and professional behavior stated the code ethics. And the director would use to understand this ethical responsibility and avoid the implementation of proposed change in policy. As a meaningful addition, the director could use a tool indicating with the financial statement and explain the company's result, such as drawing attention to the uses of a cash generated from the operation would exclude non-cash pension expenses. Alternative measure is EBITDA, which is earning before income, interest, tax, the depreciation amalgamation could be disclosed where the non-cash items consistently eliminated from comparison process. When chart account discover this company financial position has been compromised through misleading, have two options. They can either report the non-compliance to the authorities and consider withdrawing from the engagement. Both action ensures integrity, transparency, and interest of the stakeholder at large. It is in such a consultant chartered accountant is influenced by the director's suggestion and report accordingly. He will be subject to professional misconduct under Clause 5, 7, and 8 of Part 1 of Second Schedule of Chartered Accountant 1949. Clause 5 states chartered accountant is guilty of professional misconduct when he fails to disclose a material fact known to him which is not disclosed in the financial statement, but disclosed of which is necessary to making such financial statement where he is concerned with the financial statement in the proper professional conduct. Clause 7 states the chartered accountant is guilty of professional misconduct when he does not exercise due diligence or grossly negligent in the conduct of professional duties. Clause 8 of Part 1, Second Schedule of Chartered and Accountants Act 1949 state that CA is guilty of professional misconduct when he fails to obtain sufficient information which is necessary for expressing an opinion or the exception for sufficient material to neglect the expression of opinion. Financial interest, compensation, and incentive linked to financial reporting and decision making. Chartered accountants shall not manipulate information or use confidential information for personal gain or for personal gain of others. Chartered accountant might have the financial interest or might know the financial interest of the immediately close family members. That is, circumstances might create threat to the compliance of financial principle. Financial interests include those arise from the compensation and incentive arrangement linked to financial reporting and decision making. Examples of circumstances that might create self-interest threat include a situation in which chartered accountant immediately to close family members has more an opportunity to manipulate price-sensitive information in order to gain financially holding direct indirect financial interest on the employee organization, and the value of the financial interest might be directly affected by the decision made by the accountant. It is eligible for the profit shared bonus, and the value of the bonus might be directly affected by the decisions made by the accountant. Holds directly indirectly deferred bonus share rights and a share option in the employee organization, which value might be affected by decision made by the accountant. For instance, participation of compensation arranged that provide incentives to achieve the target as to support effort to maximize the revenue of the employing organization. Just example, which is arrangement might be through participation in incentive plan, which is linked to certain performance of condition being met. Director of Spinach Limited eliminated incentive computed on percentage of cash generated from operation defined under Ind AS 9 statement of cash flows. According with the terms of this appointment, due to the onset of pandemic, the company has not performed well as it the factor lost cash from operation. In order to meet the cash requirement, the Director of Spins has planned to dispose of all the unutilized equipment and investment not subsidized or associates. Tata's the spine has since the cash generated from the sale of such equipment and investment would be used for operation. The inflow of such sale would be presented in the statement of cash flow under cash from operation. The directors are concerned about meeting the targets in order to ensure the security of the jobs and feel that in the treatment would enhance the cash flow picture of the business. The inflow of the scale of which equipment and investment has the potential to make cash flow from operation and positive figures. Requirement discussion of ethical requirement of a Spinach Limited chartered accountant who is employing to secure the manipulation of statement of cash flow are suggested that by the director does not occur. Solution. In order to meet the target is required for possible the management he wants to present the company's result in favorable manner. Since the objective might be achieved by employing creative accounting techniques such as window dressing and as can be seen in the case of inaccurate classification. As per the India 16 as per of India 7, separate disclosure of cash flow arising from investment activities is important because the cash flow presents the extent in which expenditure has been made, resources are intended to generate future cash and cash flow. Only exercise the result of recognized asset on the balance sheet and eligible for classifying investment activities. For example, cash flow arising from investment activities or cash received from the sales of property, land, plant and equipment, intangible and other long-term assets. The presentation proceeds the sale of investment under underutilized equipment. It's part of cash from operations given misleading picture of the business and a function of financial statement. Operation cash flows are critical for the long-term survival of the company. The negative cash flow from the operation figures are the possible indicator of cash shortage and short-term and possible question of going concern assumption they entitled to long-term. Further, the operation cash flow is Further, the operation cash flow is recurring, whereas investing or investment cash flow tend to go on off. In this given case, we may appear the main cash requirement of operation company selling investment and equipment. Selling the equipment and investment is not usually part of trading operations, such as cash sales generated short-term cash flow cannot be repented as a regular basis. The proposed risk calculation may be regarded as a deliberate attempt to mislead shareholders who would be performing speech limited and its future performance, which is unethical. Chartered account has a duty not only the company they work for but also their professional body ICAI and the stakeholder of the company. Proceeding received from the sale of equipment and investment would be presented as cash flow from investment activity instead of operating activities. According to India 7, the statement of cash flow as per the code of ethics, chartered accountant would follow the fundamental principle of professional competence and due care, which include preparing financial statement in compliance with India. It is see a case of account permanent treatment of the manner as proposed by the management. It would result in breaching of principle. professional competent, and you can the treatment may be permitted by the accountant under the pressure of the management. The chartered accountant would prevent the management not to proceed with the official oversight accounting treatment, which involved in the A7 as a member of the case of an management instead of continuing with the subjective treatment, as a chartered accountant must bring into his attention of auditors. Otherwise, chartered accountant would be subject to professional misconduct. Order to class 1 of schedule 2, part 2 schedule, second schedule of chartered accountant 1940. The class 1 state the members of the institute, whether practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provision of the act or the regulation made thereunder or any guidance issued by the council. As a result of guidance issued by the council, member of the institute who is employee shall exercise due diligence and shall not be grossly negligent in the conduct of duties. InfoStar listed companies engaged in the profession of IT services. Director pay the bonus shares and profit achieved during the year of bonus. Profit nil 1 to 5 2% 5 to 10 and 4 10 to 26 20 to 38 to 30% 10 and 20%. The draft of the statement shows 2 crore profit. Employees of the infrastructure historically made payment of individual performance-based incentives for last 5 years. Based on the past performance, bonus amount should be 3 crores. Viewing the possibility of director is not receiving the bonus on account of company's poor performance, InfoStar chief financial officers and chartered suggested that discrimination of incentive usually payable on the employees could be avoided in this year, and this would result in the companies reporting profit as the part of them. Another report, InfoStar reported employees dissatisfaction score and staff attention rate, gender equality, and employees absenteeism in the rate of non-financial performing issues. CFO has not told the director over mail that no stakeholder read the non-financial information anyway, and this is an aforesaid suggestion, and not paying the discrimination incentive would not impact the company generally. And discuss the ethical and accounting policies of the same. Refer the relevant of the areas and whether appropriate pursuit CA Suhail. Well, ethical consider long-term success of the organization strongly depends on the fair treatment of the employees. In those terms, based on the ethical behavior due to the management as how the same is perceived by the stakeholder. In this given case, CFO suggested not paying the discriminatory bonus, which the director has considered it will enable the company to record profit of 10 crores, where the appropriate bonus out of and ensuring payout of the payout to the directors. Suggestion is not illegal as it is a bonus as description rather than a statutory construction. Therefore, the company has no legal obligation to pay the bonus to the employee. However, the reason behind the non-payment of bonuses to give rise to ethical consideration. The suggestion of CFO will have been a forced impact of reducing expenses and improving profit. On the moral ground, the suggestion likely to have negative consequences to the company. Employee would be dissatisfied if the bonus has been withdrawn. Further, they would see the director withdrawing bonus out of the profit arising from saving in bonus costs. It would be negative impact of the employee's moral and would result in low employee satisfaction score and poor retention rates, and which is reported as a non-financial information in the financial statement. The companies are also under the increasing pressure to reduce the wage gap between management and employees, but not paying bonus. This metric will be adversely affected. The CFO statement that above action will not negatively impact the company as a non-financial reporting indicator, as will not widely read by the issues of misleading. Non-financial information is becoming increasingly important to the users of financial statement as they care about the company's treatment of the employees and view has been important as a long-term success of the companies. A chartered account has a responsibility to exercise due diligence and clearly consider both financial and non-financial information while discharging the professional duty. It would be unethical for chartered accountant to guide management manner which may result into any kind of disadvantages to the stakeholder. Further, discussing the accounting profession is acceptable to responsibility to act in public interest. Chartered accountant responsible is not exclusively to satisfy the need of individual client or employee organization. Therefore, the code contains a requirement or application material to enable chartered accountant to meet the responsibility to act of public interest referred to section 100 of only code of ethics issued by ICA. Hence, this essential of chartered accountant to upload the professional standard fact and act according to the ethical principle by ensuring transparency and accuracy of financial reporting. Into cement of including gift and hospitality. The intentional objective. situation affect that use of means of influence other by individual behavior, but not necessarily with the intention to improperly influence individual behavior. The inducement is a range of major act of hospitality between the business colleagues to act as a result of non-compliance with laws and regulation. Inducement may take up different forms: gift, hospitality, entertainment, political or charitable donation, appeal to friends and loyalty, employment, other commercial opportunity, parental treatment, rights and privilege. Immediate of close family members. Child account shall remain allowed to potential threat to the account and complaints with the fundamental principles created by the offering of insurance. By the immediate close family members of the accountant to the counterpart of whom the accountant has a professional relationship to immediate to close family members of the accountant by the counterpart of whom the accountant has professional relationship. Once chartered accountant becomes aware of the inducement being offered to or made by intermediate and close family members and conclude there is an intent to improperly influence the behavior of the accountant or the counterparty considered reasonable as informed third party would likely to conclude such an intent existed, the accountant shall advise the immediate close members not to offer or accept the inducement. One of the member factors of the relevant determination would that actual or perceived intent to improperly influence the behavior of child accountant and the counterparties and nature or closeness of the relationship between accountant and immediately close family members, immediately close member families and counterpart, and the child accountant and the counterparty. For example, the offer of employment outside the normal recruit process to the spouse of the accountant of the counterpart with whom the accountant is negotiating significant contract might indicate this intent. Responding to non-compliance with laws and regulation in the case of employment of listed entities. Chartered accountant might ensure that may aware of non-compliance aspect of non-compliance in the course of underlying professional activity. In this section, guidance the accountant in assessing the implementation of manner and processing causes of activity which respond to non-compliance as aspect of non-compliance with laws and regulation generally recognized to have direct fact of a determination, material amount and disclose the employee organization to financial statement. Other than the regulation that do not have a direct effect of determination of amounts and disclose in the employee organization financial statement, but compliance which might be fundamental to the operation aspect of the employee organization and our business, to the ability to continue its business and to avoid the material penalties. The disguising mark of accounting profession is to accept the responsibility to act public interest. When responding to the non-compliance of aspect non-compliance, the objective of chartered accountant to comply with the principle of integrity and professional behavior, to alerting management or appropriate to charge with the covenant of the employee organization to seek to enable them to rectify, remedy, the mitigate the consequences of identified and suspect of non-compliance, deter the non-compliance where it had not yet concerned, to take such a factor action appropriate compared public interest. Non-compliance laws and regulation. Non-compliance comprises act and omission of commission. The international and uninterested are the contrary to the prevention of laws and regulation committed to the following parties: chartered accountant employee organization, those charged with governance of the employee organization, management of enjoying organization, other individual working for and under the direction of employee organization. Examples of law and regulation which is section addresses including that deals with the fraud, corruption, bribery, money laundering, terrorist financing, proceeding, crime, security, market trading, banking, other financial business products and services, data protection, tax and pension liability payments, environmental protection, and public health safety. Responsibility of all chartered accountant. It is a protocol. Procedures exist in the chartered accountant employee organization to address non-compliance or suspected non-compliance. Accountant shall consider them, determine how to respond such non-compliance. Responsible senior chartered accountant service. The senior chartered accountant service such directors, officers, senior employees able to exert a significant influence over the major decisions regarding the acquisition, deployment, or control of employee organization, human, financial, technology, physical, and intangible sources. There is a greater expectation of such individual to take whether the action is appropriate in the public interest to respond non-compliance or suspected non-compliance in chartered accountant within the employee organization. This is because the senior chartered accountant roles, positioning, spheres of influence of the employee organization address the matter. If a senior chartered accountant identifies the suspect of non-compliance as occurred or might occur, chartered accountant shall subject to the consideration mentioned above under the responsibility of his accountant. Discuss the matter of accountants immediately senior of any If an accountant immediately superior appear to be involved in the matter, the accountant shall discuss the matter with the next higher level of authority within the employee organization. The senior chartered accountant shall also appropriate steps to have a matter communicated to the charge of the governance, complying with the applicable law and regulation, including legal and regulatory provision governing the reporting non-compliance subject to non-compliance appropriate authority. Having consequence of non-compliance, subjecting to non-compliance rectifies a remedial emitter, reducing the entity and reducing the risk of reoccurrence. Saying the deter the commission or non-compliance if it had not yet occurred. In addition to responding to the matter in accordance with the previous of this section, as Indian Chartered Accountant shall determine whether the disclosure of the matter to be employed in organization by external auditor if it is needed. Such disclosure would be pursuant to the senior chartered accountant duty of a legal obligation to provide all the information necessary to ensure the auditor to perform the audit. Determination whether the further action is required. Senior chartered accountants will assess the appropriate of the response to chartered superior if they have the charge with governance. Examples circumstances that may cause the senior chartered accountants to no longer have circumstances the integrity of the accountant superior and they have charge with the governance including supervisor. The accountant suspect has evidence of the involvement of intention involved in any complaint. In the contrary of legal and regulatory requirement, they have not reported, authorized reporting or matter of appropriate authority within the reasonable period. Further action of senior chartered accountant might take place. Information of the management of the parent entity of the matter if the employee organization is a member of the group, disclosing the matter to appropriate authority specified under specific respective law, resigning from the employee organization. Resigning from the employee organization not to substitute the taken action takes place and needed to achieve the senior chartered accountant objective under section. However, must be limitation as to whether the action available in accordance with the circumstances of resigning might only be available in course of action. Seeking advice. The assessment of the matter would involve complex analysis of judgment and senior chartered accountant might consider consulting internally, obligating internal legal advice to seek the accountant's option and the professional legal implication to take any part of the course of action. Counseling on the confidential basis of the institution. Determining whether to disclose a matter to appropriate authority. Disclose a matter to appropriate authority would be precluded doing so would be contrary to the law and regulation. Otherwise, the purpose of making disclosure to enable the appropriate authority cause whether to investigate the action to take place in the public interest. Responsible to chartered accountant other than a senior chartered accountant. If in the course of carrying out the professional activity, chartered accountant became aware of the information concerning non-compliance or suspect of non-compliance, the accountant shall seek and obtain an understanding of the matter. This understanding shall include nature of non-compliance and suspect of non-compliance in the country circumstances in which occurs or might occur. If the chartered accountant identifies suspect of non-compliance that occurs, might occur, the accountant shall subject to the consideration mentioned above under the responsibility of all chartered accountants. Inform an immediate superior to enable the superior to take responsibility. If an accountant immediately superior appears to be involved in the matter, the accountant shall inform the next higher level of authority within the employee organization. The exception circumstances the chartered accountant may determine to disclose the matter to an appropriate authority in appropriate course of action. If the accountant does that disclose the permanent, then such matter is disclosed. Accountant shall act in good faith and exercise the option to make a statement and assertion. Agastya Limited is a listed company engaging in manufacture of automotive spare parts. The company is preparing financial statement for the year 31st March, and this direction of Agastya Limited is entitled to incentive-based operation profit margin of the company. They have been appointed as a consultant advisor preparation of financial statement. You notice the following issue. Draft of financial statement including 75 lakhs given as a loan to director. The loan has no specific repayment terms and the same is a repayment demand. The director has included such a loan under the head cash and cash equivalent. They have reasoned that since such a loan has advanced to one of the director repayment demand, it's readily convertible to cash. Further, the director opined that a presentation would not be a problem even if the Indian famous financial statements essentially prepared in accordance with the accounting policy with the choice of the company. As in the case, Agastya has made policy choice to show as a loan and the cash equivalent. Disclose ethical accounting policies and above disclosure for the Indeed. The act as an involved loan made the director as part of the cash and cash equivalent. It appears that the director has misunderstood the definition of cash and cash equivalent, believing that loan be in cash equivalent. As per the NDA 7 statement of cash flow, cash equivalent short-term, highly liquid investment, readily convertible to known amount of cash and which subject to insignificant risk and changes in value. However, the loan given to the director is not a place of enable Agastya to manage short-term cash commitment. It has no fixed repayment date or likely to director default also not known. This is a classification of cash equivalent is inappropriate. Instead, loan would be regarded as a financial asset under Section NDS 109 financial instrument. Further information would be required. For example, 75 lakhs fair value. We said that loans will be needed. Never be repaid according to this regarded as a component of director's remuneration, as if the same would be exposed and disclosed accordingly. Further, since the directors are likely to fall in the category of key management person, related party disclosure and the NTA is 74 and related party disclosure likely to be mentioned. The treatment of loan and cash equivalent based on two differential quality character describe conception framework of financial reporting, namely relevance. Information to be disclosed separately to relevant to the user. Faithful representation. Information must be complete, neutral, free from error. Clearly, it will not be the case if the loan or director is shown the cash equivalent. It's the same treatment also violates the conceptual framework of key in ensuring quality characters and understandability. The loan is shown as cash equivalent. The mask the true nature of the company's practice, thereby reducing the understandability of financial situation user. Variability users have different knowledge of the indifferent observers can reach conscience of the particular and depiction of transaction amount balance is faithful representation. Verifiable, giving assurance to the user of information. Faithful represent economic phenomena. The intended represent the treatment used by the director of Agastya Limited does not meet the benchmark and reflect the subjective basis of directors. The comparability of financial statement to be comparable year to year and with the companion transaction must be correctly classified and presented, which is not happening here. It is a cash balance. 1 year include a loan to the director, and next year does not. It will not compare like with that. It's a potential conflict of interest between the director and the company, which mandates a separate disclosure of minimum. Further, the issues complaints of Section 185 Companies Act of 13 do arise. It's probably the director want to hide such a loan and balance as a cash equivalent. The directors are responsible for the financial statement required statute, and thus is responsible to put the right to put errors and the result of the financial statement not complying with India's. Director are not legally bound to maintain proper accounting records, and records in the loan and cash equivalent clashes with the requirement. By masking the nature of the transaction, it is possible that the director is motivated by the personal interest and thus failing to the duty to act honestly and ethically. If one transaction is misleading, it casts doubts of credibility of financial statement as a whole. As a consultant, it becomes responsible to get the financial statement rectified and guide the director about the principle enumerated in the NDAs and correct treatment is according to the provision. Otherwise, he is subject to professional misconduct under Clause 6 of the Part 7 and Part 1 of Second Schedule of Chartered Accountant 1949. The Clause 6 and Part 1 of Second Schedule of Chartered Accountant 1949 states that a CA is guilty of professional misconduct when he fails to report the material misstatement known to him appear in the financial statement with which he is concerned to professional capacity. The Clause 7 states the Chartered Accountant is guilty of professional misconduct when he does not exercise the due diligence, gross negligence in the conduct of professional duties. Pressure to breach the fundamental principles Chartered Accountant shall allow pressure to other result in breach of compliance with the fundamental principles. The place pressures other than the accountant knows as a reason to believe the would result of other individual breaching a fundamental principle. Chartered accountant might face pressure that creates a threat to compliance with the fundamental principle, and this enables intimate threat and even understanding the professional activity. Pressure might be explicit or implicit and might come from within the employing organization, for example, from the colleague or a superior, from external individual organization such as a vendor, customer, or lender, internal, external target, and exceptions. Expectations. Example, the pressure might result threat to compliance with fundamental principles include pressure related to conflict of interest, pressure from your family members bidding to act as a vendor to chartered accountants, employee organization to subject to family members over other perspective vendors. This causes circumstances creating pressure and consulting with others about the conclusion and might cause assess the chartered accountant to evaluate the level of threat. Such discussion and consulting will require to be allowed and principal confidentiality might include discussing the matter with the individual who is exciting the pressure to seek to resolve it. Discussing the matter of an accountant superior. The superior is not an individual exciting pressure. The escalating the matter within the employee organization, including when appropriate, explain the consequential risk of organization. For example, higher level of management, internal and external auditor, those such as currents. Discussing the matter in the line of employee organization policy, including ethics and whistleblowing policy, using established mechanisms such as confidential ethics hotline. Consulting with colleagues, superior human resource panels, other child accountant institute, and industry associate and legal counsel. For example, an action that might eliminate the threat created by pressure on child accountant caused by the restitution or segregation, certain possibility and duties so that account is no longer involved with the individual entity extorting the pressure. And on 31st March, Mitra is planned to dispose our device as subsidiary. Those are limited. The planning has been approved by the board and reported to the media as well as stock exchange of Mitra Limited. It's expected that the JR Limited non-controlling shareholder of the course for 28% stake. He will acquire our device and equity interest. The sale is expected to complete in October. Those are expected to have substantial trading losses in the period of the sale. The Mr. X chartered accountant who is employee of the financial department of Mitra, which is showed those limited as held for sale in the financial statement, create and restructuring provision to include expected cost of disposing the further trading losses. However, the chief operating officer does not wish to those are limited to characterize as a held for sale, not provide the expected losses. CEO is concerned that as have been many affects the sale and would severely result in bonus target not being met. He has argued that the management is ahead to secure high sale prices to maximize the return of shareholders of Mitra. He is also hinted that Mr. Rex's job could be the stake in the provision when making the financial statement. His expected cost of the following is future trading loss 20 crores, various legal costs to sale 1.5 crores, redemption cost of those employees for causing impairment and loss of property 12 crores. Discuss the accounting treatment of Mitra would adopt, address the issue of financial statement, and discuss the ethical issue that would arise in the above scenario, including action would be Mitra Limited, Mitra Action. In terms of India's 105 non-current asset held in the sale of discontinuing operation, the entity will classify non-current asset held in the sale. It is carrying an amount will be recovered principally through a sale transaction rather than through continuous uses. For this case, asset group, the disclosed group only available to immediate sale is presently condition subject only in terms usually customary to sale of such asset, and the sale must be highly probable. The sale of the highly probable, the appropriate level of management must be committed to plan to sell the asset and actively programmed to locate the buyer and complete the plan must be initiated. Further, the asset must be actively marketed at a sale and the price of reasonable relation to the current current value. And in addition, the sale would be expected to qualify the recognized completed sale within 1 year of the date of classification, except that this specific case is permitted by the standard and required to complete the plan should be indicate that likely to be significant changes in the plan would make that plan to be withdrawn. Probability of a requirement of approval to be considered part of assessment whether the sale is probably higher. Entity is commitment to say plan involving loss of its control or substantial shall include all the certain liability of the subsidiary and held the sale and criteria set about met and regarding the regarding entity should retain a non-controlling interest in forming substantial sale. Based on the provision of highlighting above, the dispose of those appear to meet with the certain sales. JLM does probably acquire the sale of the highly probable expecting the complete 7 months after the year end. Well within the 12 months criteria highlighted above, according to those limited should be treated as a disposable group. Since a single equity transaction is most likely to form those disposable, and those limited is deemed to be a separate major component of business and geographical area of groups. The assets of the group would be presented separately of continuing operation within the financial statement. In the terms of NTAs to the 105, the non-current asset held by sale of discontinued operation, and the entity shall measure the non-current asset classified sale of class of the lower of carrying amount of the fair value of less cost to sell. The carrying amount of those are limited subsidiary method comprised of net asset and goodwill less than non-controlling asset interest. The impairment of loss recognized to reduce those are limited to fair value less cost to sell. Allocate the first to goodwill and then to prorate of these across the non-current asset of the company. Chief Executive Officer is correct, incorrect, exclude the form of reconstruction provision of the essential financial statement since the disposal of communication in the media as well as the stock exchange constructive obligation exists. However, the ongoing cost of business should be not be provided for any directly attributed cost or reconstruction should be provided. Further, operation loss should be excluded as no obligation event has arisen, as no provision is required to impairment loss of property and equipment is already considered, and the remeasurement of the fair value of loss to result. Provision required 5.1.5 focus only. I think the accountant has a duty to ensure the financial statement of fair, transparent, comply with the accounting statement. Mr. X committed several mistakes. In particular, he is unaware that his cost would include the restriction or reconstruction provision and failed to recognize there is an obligation event and the aspect of the operation losses. Chartered accountant is expected to carry the work due care and attention lending to credential the financial statement. Accordingly, he must update the knowledge of the ensure the work is carried out in accordance with the relevant ethical and professional standards. The failure to do so, he will be breach of professional conduct. According to the acts, must ensure that the issue is addressed. For example, attention, regular training, and professional development courses. It appears the chief operating officer is looking to means of manipulate the financial statement for meeting the bonus target necessary to willing to reduce the profit of the group, stop playing the held by sale of ready to respect of those element which while willing to create appropriate restructuring profession. Both our judgment would be comply with the requirement of India AS 19 as a result of the reduction of profit. His agreement with the management is not covered at the cost of objective and fulfilled responsibility of performance of the company. In this given case, appears a chief operating officer is motivated by the bonus target under the graph of maximum return of shareholder. Therefore, its result in the presentation of the result of group. Further, the threatening to X and Kosi was acted ethnically, threatening an intimation of behavior unacceptable against ethical procedure. Thus, by giving the rise to ethical telegma, Mr. X has the duty to produce financial statement, but doing so in the fair manner would result in the loss of job by him. And the chartered accountant should appropriate chief accounting officer to remind the same ethical principle and communicate with him necessary adjustment of accounts so that they will be fair and objective. In the case of Mr. X falls under the under-diligence CO1 applies in current accounting treatment, he will be subject to professional misconduct and the class 1, class 2, second schedule of chartered accountant ID department. Class 1 related to the members of the institute where the practice or not shall be deemed to be guilty of professional misconduct or contravention of provision of act as the regulation under the any other guidance of the council. As per the guidelines issued by the council, the meet of council member institute employees shall exercise the due diligence and shall not be gross negligent of conduct of business. Analysis of financial statement. After studying chapter, you will be able to examine the key features of a financial statement and the relevance of better reporting. Examining the key factors to keep in the mind the preparation of financial statement. Follow the best practice in preparation of financial statement. Analyze the common mistake incurred in peer preparation of financial statement. In the presentation of financial statement with the respect of Schedule 3, rectify the mistake before financial statements by addressing the issues, proceeding the correct presentation and disclosures. Analysis of financial statement. Characteristics of good financial statement: true and fair view, relevant, understandability, consistency, regular compliance, and universality. Best practice: compliance. Complete should be complete, simple and specific, transparent, material, integration of notes, disclose basic significant accounting policies, disclosing of key estimates and judgments, integration approach, illustration based on NDAs. Introduction. Business is an important organ of the society and helps overall development and the typical business has varied stakeholders including employees, owners, banks and trade activities. Trade associates, governments, general public and so on. These stakeholders are particularly involved and keenly interested in knowing about the financial well-being of business organization. The financial report of important mean of communication to entities to disseminate the information of the operation to various stakeholders. While the increasing focus on the government and significant financial reporting has exponentially increased, the importance of the robust financial reporting cannot be emphasized though. Indian enterprise move ahead of the growth and path and much faster pace and exposure to global environment experts. The ever increasing complexity of transaction through thrown up newer challenges of financial reporting and relevant guidance. Presentation disclosure in the content. Assuming greater significance in enterprises aim to achieve excellence in the financial reporting today, there is a number of requirement to mandate the regulator. There is a now became the imperative of entities to keep pace with the fast-moving economy in the area of financial reporting. The financial statement is a source of vertical communication between entity and the investor stakeholder. This is act as a barometer for such performance, both past, futures, and enterprises. Decades back, the enterprise is mostly proprietary owned, and the financial statements are simply complete with theirs presently annual just provided with historical data. However, when globalization and increased the dependency of technology, where companies are expanding both horizontally and vertically, many spanning across geographics, the number of stakeholders being investors, suppliers, employee, even tax authorities have increased manifold. The financial statements are supplement to the disclosure, which is the key source of the information, helps the user of the, interpreting the financial statement better manner in taking appropriate decisions. Therefore, one can say that disclosure is added to the good reason. Disclosure is not the only requirement which will make the financial statement to be good financial statement. The presentation and compliance with the format is also the important factor which is taken into consideration evaluating financial statement. Chapter enumerates some of the practical practices currently being followed in financial reporting set of suggesting best practice to ensure quality of financial statements enable prepares and financial statement benchmark. These financial statements intended breaking notice to the prepare and review of financial statements and some common errors and omission that may avoid the preparation of financial statement. Financial statement of corporate entities. The format and content of financial statements of companies are required to be according to Schedule 3 of Companies Act 2020. Further, there is a relevant addition disclosure required to be both in respect of balance sheet and statement of profit and loss account. Certain industries have format specific of this industry regulator which need to be followed by them. The fact has been recognized of the Companies Act 2013. The provision to be Section 129 which implies a format set out by the Schedule 3 will not be applicable to the insurance company and banking company. Format of these companies are prescribed in specific activities. In terms of format, Schedule 3 is only prescribes a vertical format balance sheet and does not provide alternative using horizontal format. Further, Schedule 3 set out the minimum requirement of disclosure on the facts of balance sheet and statement of profit and loss account. It allows line, subline items and subtotals which is presented in the addition of substitution and fact of financial statement when the presentation relevant to the understand of the company's financial position and performance in the category of industrial sector. Specific disclosure required and when requirement complaints or amendment of the company's understand. Schedule 3 is now required all disclosure as may be part of the notes. Apart from the granting of overriding state of standards, the cognizance has also been given the requirement of standard, the format of balance sheet and according the elements such as deferred tax asset and intangible asset have been included in balance sheet. Also, it has been clearly stated the disclosure requirement in the Part 1, Part 2, Part 3 and Schedule 3 is addition to and not substitution to the disclosure requirement. They specified the respective notification in the terms of the Schedule 3 to be considered as part of the specified notification schedules. One of the pertinent aspects that is needed to be considered is preparation of specific financial statement. With regard to Schedule 3 is that does not prescribe the accounting treatment to adopt this entity. It is only prescribed the format and content. Contentious fact that is a particular item has been included in the format of the balance sheet in Schedule 3 does not imply that the particular item can be recognized in balance sheet. Schedule 3 prescribes only presentation, not treatment, which is subject to matter of standards, which has been specifically acknowledged in Schedule 3. Characteristic of good financial statement in Indian scenario, ICE has recognized accounting bodies issuing generally accepted accounting policies and had made the standard mandatory for enterprise accounting within India. Besides accounting statement, ICE has also ensured contravention of the IND-AS. This adaptation are notified by the MCA and large entities have already implemented and the transaction phases of adoption and depends upon the net worth of other specific criteria. And the key feature of any of the set of financial statements are true and fair view of the affairs of the enterprise. It is the most important features of the set of financial statement. The user of the financial statement depends fully on the same and hence of the reliability factor supreme. Relevance. The financial statement should provide the relevant information prior to presentation. It is not the point of a presentation of historical data past several years. It is a redundant state of date. The key that as a user of financial statement would be a potential position to take independent selection after reading a financial statement. The decision can be different from different users. In the investor decision whether to hold the shares of the enterprise would stem from the state of statements. From a senior employee of the company, it can be a future growth prospect of the company. But what's important is that user would be empowered to make decision through financial statement. Understandability. The user to make sense. The financial statement should be readable and content elusive to digestion. Even the layman should be able to read the same and understand the same basic information. It is not the accounting policy and procedures. Consistency. The user of the financial statement should be benefited only if the financial statement release periodic intervals in the standard format. Yes, the entire purpose of furnishing financial statement will be defected. That's the reason the law is prescribed for the presentation of formats and periodically. The regulator complaints that needless to say the tax authorities, market regulators, etc. Rely hugely on the financial statement to understand the gauge of complaints made to enterprises. Universally, last but not least, the financial statement should be comparable both within the industry and outside. So the financial statements of two different companies should be look like both are engaged same manufacturer steel. Likewise, the financials of the companies of manufacturer steel in India should be comparable to the set of financial statement of the company based on the US engaged in similar line of business. The line need to be the above basic key characters and would brought in the accounting bodies and would overcome together to set of common standards and better integration of harmonized accounting principles and practices. True and fair view affairs of the enterprise, relevant, understandability, consistency, regularity, compliance, universal, good financial statement should be bread practice of applicability of companies. Following of some of the practice it follow the purpose of financial statement, it would lead to better presentation and disclose and will be serve the meaning purpose for the various stakeholders and understanding the function, the financial position, the financial performance entities and appropriate decision making. Complaints. The financial reporting is a regulated activity and compliance with the requirement to must comply with the standards and regulation, but also ensure the financial statement are effective part and wider communication with other stakeholders. It will be simple and understandable without any change in the interpretation. Complete information disclosed in financial statement should be complete and should not lead to any cross questioning of mind of the user. Ensure consistency of disclosure across the financial statement, where the accounting policies state the balance of debtors, creditors, and loans and advances are subject to reconciliation confirmation. This indicates that the balances may not be appropriately stated, and as well as arising questions regarding appropriateness of audit process. Simple and specific drafts, notes, and accounting policy in commentary of more complex areas, simple and plain English. Ensure there is no vague or ambiguous notes. Example, the definition of derivatives and hedge items and how the company uses these items. Derivative is a type of financial distribution the company used to manage risk. It is sometimes a derivatives which value based on the underlying asset. It is generally in a form of contract between two parties entered into fixed period. Underlying variance such as exchange rate, which it causes the value to change over time. Hedge is where the company uses derivative to manage underlying exposure. Company main exposure to fluctuate in foreign exchange risk. Key maintain the risk of hedging for its movement and effective boundaries of exchange rate changes in manageable affordable amount. Make and policy clear and specific. Ensure that there should not be any vague and ambiguous notes. No further information of explanation that will lead to misrepresentation information. Further, reduce generic disclosure and focus on the company specific disclosure. Explain how the company applies policies. Examples: a note down the land not registered. The name of the company has been received from the use of group companies. However, there is no disclosure recorded that lease elsewhere in the financial statement. This leading ambitious regarding whether land has been capitalized in the books or not. The better disclosure would be include a note to provide property, plant, equipment that asterisks against a land note and land including area measured acres through the which is a registered process is still in progress. That land has been given on the lease to group companies. Transparency. Preparation of financial statement may many at times certain assumption and any other basis are taken. The disclosures assumption and base transparency so that the user is not misled. Rather, the transparency shall provide useful additional information and substantial yet decision judgment. Materiality. The lack of clarity to how the compliance with materiality is perceived one of the main drivers of overload financial statement. Many effective use a materiality to enhance the clarity of consciousness of financial statement. The information would now be disclosed in the material. It is material would be influence the user decision based on the financial statement. Our materiality assessment, the filter, the decision of the importance of disclosure and had to be omitted. Once has been determined a specific time limit and required disclosure, you should access that disclosure about this time, including how much detail provided in the best of organization information. Example, capital commitment. The company has committed to purchase several type of property, plant and equipment individually. Each purchases is immaterial. However, the total amount of material commitment of the company, therefore some disclosure should be made regarding the commitment. New revenue stream. Companies and software sector has communicated to software sector a strategic intention to focus on new development effort to cloud-based communication. The particular financial year, cloud-based revenue is less than 5% total, but have grown rapidly in the company. Therefore, decides to provide separate disclosure about the stream revenue according to index and India's 100 operating segments. Even though other revenue streams are a similar size, are typically combined with other revenue. Integration of notes. Notes covers the largest part of financial statement. Thus, the effective tools of communication have the greatest impact on financial effectiveness of their financial statement. Group notes are categories. The place of the most crucial information more prominent in the combination of both. Integrity of many note items. There is significant and many significant key estimated judgment. Inventories, accounting policy. Inventories are stated the lower cost or not realizable value. Cost include all the expenses directly attributable to the manufacturing process as well as the suitable portion for related production overhead. Based on the normal overhead capacity, cost of ordinary interchangeable items are assigned using the first two cost formula, but necessarily value the estimate selling price in the ordinary course of business, less any applicable selling expenses. Significant estimate uncertainty. The management estimates net traceable value of inventory include taking into account of the most relevant evidence, reliable evidence applicable to each portfolio. The further relation that the inventories may affect the future technology or other market-driven changes that may reduce the future selling price. Inventories consist of the following: raw material consumed merchandise 31st month or 31st of previous year, 1 crores. Ensuring that accounting policies are disclosed in one place and not scattered in various routes. For example, one case it is observed that the policy to recover 100% depreciation asset and costing less than 5,000 as specified in the note and fixed asset rather than the accounting policies of fixed asset. Disclose a material accounting policy. The financial statement will disclose any material accounting policy. Disclose only for your material reporting policy. Remove your non-material disclosure, that do not add any value. A disclosure should be relevant, specific to the company, and explain how you apply your policy. Aim of accounting policy disclosure to help investor and other stakeholders properly understand the financial statement. Use judgment to determine whether your accounting policy is material, considering not only the materiality of balance or transaction affect the policy, but also factor including the nature of the firm's company operation. Taxable territory defense. Use of the certain trades and brands and for licenses acquired in the past business combination. Management consider this asset has been interlined life and expertise to consume the use of business. For the assets deferred tax and recognize use of capital gain tax applicable to sale. Disclose the key estimate judgment. The effective disclosure about the most important estimate and judgment enable the investor to understand the following financial statement. Focus on the most difficult subject to the complex estimate. Includes details of how the estimates are derived and key objective, key assumption involving process of reviewing the analysis of insensitivity. Provide sufficient background information on the judgment. Explain how the judgment was made in the inclusion result. Integrity approach. Financial statements are one part of the communication of the shareholder. The final report typically includes a financial statement and management commentary, information about the governance strategies and business control, and CSR report, business responsibility report. This is also grown trend in showing integrated reporting to ensure the overall effective communication. Consider annual report as a whole and deliver consistent and coherent message throughout. The NDA's one is a component that one may present outside the financial statement and financial review and describe the essential to main feature of the company's financial performance and financial position. And the principal uncertainties is many companies also present outside the financial statement. reporting of segments such as environmental policy reporting and value of added systems. The particular is industries in environmental factors are significant when the employees are registered as the important heavy groups. Even though the report and mass statements are present outside the financial statements are outside the scope of NDAs and they cannot be out of scope of regulations. The CSR disclose require the Companies Act and 134 Schedule 47 case studies. So, as per on 1st April, the limited to advance of housing loan 515 lakhs from the employees into 6% per annum repayable 5 equal installment along with the interest in each year. The employee is now not required to specify any performance against benefit. The market rate of such a loan is 10% per annum. Accountant of the company's recognized staff loan, the balance sheet equivalent to the amount of housing loan dispute of 15 lakhs, and the interest of the year recognized on the contract rate is on second of 90,000. Analyze whether the above contracting treatment should be accounted as compliance with the relevant NDAs. If not, advise a statement of housing loan interest and other expenses and financial statement as tax limited to the financial year working in the applicable NDAs. You are required to explain how the accounting loan should be reflected in NDAs and compliance of balance sheet. The accounting treatment and the accountant is not the compliance with the NDAs 109. Financial increment in the NDAs 109. Initial recognition and the entity shall measure the financial asset, financial liability in the fair value. The fair value of instrument is initial recognition normal of transaction price. The fair value of in consideration given to receipt after initial recognition of the entity shall measure the financial asset either in amortized cost or fair value through base profit and fair value through comprehensive income. Hence, the loan is given to the employee is not a market return. However, the fair value of loans will be equal to the initial NDAs 108 as a financial statements initially measured and recorded in the books of accounts. Fair price. However, the interest income recognition statement of profit accounts will be recognized effective rate of 10%, not the rate of 66%. Corrective accounting treatment is 100 measurement of fair value percentage on the loan of initial INR is market value, creating the measurement of fair value percentage on loan of initial recognition market value interest of the similar loan consider level 1 observed 10% and discount of cash flow and the cash flow will be given at date outstanding loan principal interest and discount rate on fair value of interest on the 14 lakhs 90,000 12 lakhs on the 3 lakh 90,000 3 lakh 70,000 3 lakh 40,000 discount rate. As per the NDAs, employee benefit of all the forms of consideration given in the entity in the exchange of the service rendered by the employees in termination of the employment. Difference of the loan procedure and present value of a loan shall be treated in prepaid employee costs irrespective of whether the employee is not required to give any specific performance against the benefit. This is because the employee is required to in service of the company and continue to avail the benefits of concession rate of loans and housing loan. Practically, once the employee leaves the organization, they have to repay the outstanding loan because of the company provide loans, concession rate, and the interest on the employees. Hence, the employees benefit use the companies to employees in term and cost is 15 minus 14 lakhs, it's 1.4 lakhs. This default amortized over the period of loan straight line basis. 10% interest, 10% repayment. 10% repayment including interest amount is 11 lakhs 2 lakhs 76,000 and was a different percentage only 80,000 difference of 470 to be appropriate for competition. Our stable loan to employee account or prepaid employee 1 lakh without employee to 1,50,000. The prepaid employee cost 31st March bank account 3,90,000 finance to income 1,90,000 and loan to employee account 2,90,000. So employee benefit cost account to prepay employee benefit cost to prepaid account to 10,000. Always housing loan becomes appears in the financial statement. Non-current asset, financial asset loan to employee that non-current asset prepaid employee cost. Prices of the prepaid asset employee non-current on the employee to 20,000. Other current asset prepaid employee cost of 10,000. Default tax and temporary difference among the current period and cost balances will be recognized. However, the absence of the rate as defaults recognized. Total limit is purchase a manufacturing plant and things like last April are useful for the plan of 10 years. On 30th September, totally stop using the manufacturing plant because of the demand of the decline. How the plant is maintained with the workable condition, it is used further of demand picks up. The accounting total decided that the plant is held for sale until the plant demand picks up, and according to the measures of the lower carrying amount, the fair value less cost. This account has stopped charging depreciation on the rest of the period. The plant held for sale the fair value less cost that was December 31st March and 4 lakhs 3.5 lakhs account perform. The carrying out of initial classification purchase plan 6 lakhs less accumulated equity 1.5 lakhs. The fair value of the cost to sell on the 31st is 4 lakhs. The value to be lowered about to 4 lakhs. Balance sheet extra 31st March current asset classified held for say 3 lakh 50,000. Analyze whether the above accounting treatment made the account as compliance with the India's. If not, advise the correct treatment according to necessary completion. The above treatment need to be examined in the light of the provision of India 16 land property equipment and is 105 non-current asset held for sale of discontinuing operation. The para 105 non-current asset held for sale of discontinuing operations state that entity shall classify non-current asset as held for sale carrying amount to be covered principally through the sale transaction rather than the country's source. The paragraph 7 of India's 9 states that for the case asset must be available immediate sale as a present condition subject to the only the terms usually customary of sale and asset for the disposal groups as the sale must be slightly probable. Thus, the asset as a probable group cannot be classified non-current asset or disposable group held for sale is entity intent to sale to distinct future. In further, paragraph 8 NDA is 105 states that the sale of the highly probable appropriate level of management must be committed to plan to sell the asset and disposable group and the action program to buy acquired buyer and complete the plan may have been initiated. Further, the asset must be actively marketed and the sale of the price that is a resultant of relation of current price or value. And sale would be expected to qualify the recoveries of expected sale within the year of the date of classification and action required competent plan and should be likely to significant changes of the plans made that the plan is withdrawn. Paragraph 13 and ES 19 states that entity shall not classify the held of sale of non-current as a non-current asset disposal group that is in complaints that it is because of the carrying out without recovery of principal though paragraph of 14 in ES 110 entity shall not account uncurrent asset that is temporarily used for the use of amended paragraph of 55 of ND 16 the operation does not cease as when the asset become idle or retired from the use unless it fully depreciation and going to the guidance of given. The accountant the protest stated that plan held for sale measured the fair value less than the cost of sale. After depreciation is not being charged since the same the date classified the held sale is not correct, not recognized under 105 or 106 and 16. According to the applicable plan to test plan to necessary to treat the abandoned asset or not held for sale because the carrying amount will be pretty principally recovered through continuous use. Subloader shall not stop charging depreciation to treat that plan held for sale because the carrying amount will be recovered principally through continuous use of the end of the document later. Calculation of amount purchase unit 6 lakh less accommodation for 3 years 1 lakh 40,000 impairment for 70,000 so 3 lakh 50,000. Asset non-current asset plant property equipment 3 lakh 50,000. Fair value to cost to sell 3 lakh 50,000. The value is not used since the plant is simple not to use manufactured to decline the one. Recoverability amount higher amount of 350,000 impairment loss if carried amount minus recoverability loss impairment loss 4,20,000 or 3,40,000. Case study investigation the fire damage consignment inventory one of the Jupiter Limited warehouse and inventory has been manufactured 31st March costing 8 lakhs net realizable value of the inventory damage estimate 9,60,000 because the damage caused Inventory and companies are required to split up the additional amount of 2 lakhs or repair and repack the inventory. Inventory the accountant should be treats the event of adjusted events causing the damage of the inventory financial statement according to the repurchase. And the inventory sold noting the cost of 9 lakhs. Cost 8 lakhs, net realizable value 9 minus 2, 7 lakhs. Inventory lower the cost of 7.6. Analyze whether the above accounting treatment made by the accountant regarding the financial year 31st month 2020 is not advise the correct treatment or solution.